Okay, good afternoon, everyone. Thank you for joining us this afternoon. I'm Mike Sedek, Managing Director of Retail Trading at Lightspeed, and we've got another great webinar lined up for you today featuring Dave Shine, who, as most of you already know, is a veteran Wall Street trader and founder of ShinesTradingRoom.com. And today, Dave is going to do a comprehensive introduction to momentum trading. And we were originally going to do the whole presentation in one session, but after reviewing how much material we actually wanted to share with you in order to make this a truly beneficial lesson, we decided to break it up into two parts. So we're going to go through as much as time allows today and then do a part two of this webinar next month. So stay tuned, check back on our website around the end of the month, and we're going to post a registration form so you can sign up for the second part. So just a quick disclaimer, please keep in mind that this webinar is for informational purposes only. Nothing that we talked about today or present today should be construed as investment advice or a recommendation by either Lightspeed or Dave Shine to sell, buy, or hold any specific securities. We are recording this webinar, so if there's anything that you miss, you can always come back and view it later. We're going to upload it to our website along where all our other webinars are located. So if you go to lightspeed.com/webinar, you can see this webinar as well as all our past archive recordings. And this one will be uploaded by tomorrow afternoon. And of course, we encourage you to ask questions as we go through the presentation. All you need to do is just type them into the webinar question box. We'll try to address them as we go along, and we'll also do a Q&A toward the end of the session. So Dave, I'm going to hand it over to you.
Okay, Mike, thank you. Hey guys, welcome aboard to today's seminar. My name is David Shine. I'm the founder and CEO of ShinesTradingRoom.com. I've been in this business a long time. I know Mike, I know Lightspeed a long time also. And I'm proud to have everybody joining us today for, I consider it, vital trader information. As you know, we are in volatile times, and everybody out there needs to be as prepared as possible to go to battle every day like we do in this marketplace. So I put together a production here with my team to give a intro into what goes through my mind. One thing after another built into this pretty hefty presentation, and it's basically about a 30 or 45 days intensive educational course that we're going to try to pound into as tight of a session as possible, I guess. So let's get started right away. First of all, I wanted to thank Lightspeed and thank Mike in particular for making this a possibility for us to give this presentation to everybody. So as we go into this also, I just want everybody to know that trading is an ongoing educational process, and me, myself, I learn every day. One of the things that separates me is that I've been through so much experience. I mean, I would consider myself, and has been touted as one of the most active traders on Wall Street over the past 15 years or so. Really, at times, I guess, being even bigger than black boxes. I remember at one point somebody contacted me, one of the firms I was trading with, and said, "Hey, you trading a black box?" And I said, "No, that's my fingers." And I was doing all the trades myself, which allows for me to pass on my experience and my knowledge to you guys as much as I could pass down any jewels that I could give to you guys to take with you. That is my goal. That's what we do every day at Shine's Room, and I continue to try to push that message out to everybody. So we're going to get started right away. I do welcome any questions, any comments, any feedback, anything that you guys want to talk about during the presentation. A lot of times people wait and save their questions for later on. I'd ask you guys at any section if you'd like to stop and ask questions. Actually, I'm going to make it mandatory for everybody out there to ask questions. And we've been doing a lot of questions and answer sessions recently because people really need to get to the heart of what either can benefit them or increase their trading abilities and skill set and so on. So let's get started, and feel free to interrupt or to type in questions whenever you'd like. So I'm going to go through some of these slides and talk you through them. So basically, it's just an intro for me. Go back to a little bit of my background, and like I said, I've been trading stocks a long time, and I started at age 13, picking up the New York Times, and my mom taught me how to read the Times and invest from there. I used to call brokers. I used to call, I believe it was Smith Barney at the time, or Shearson, I think. Before that, call up a broker, try to get somebody on the phone, confirm my order, repeat my order, go through my account number, and so on. By the time I got my execution in, there was no stock around at that price anymore, and I was at the mercy of the marketplace. Now you have online trading. That's where Lightspeed comes into the picture. You had, in the late 90s or mid-90s, we became known as something like the SOES bandits, and we had electronic trading platforms to really take it to the next level, which allows for us and allowed for me to do what I do. And all you gamers out there, or anybody who plays video games, anybody who's plays games on the web, this is sort of was the evolution for me. It went from like very prehistoric into futuristic in a hurry. So with the development of these platforms, trading platforms that have evolved even until today and continue to evolve, allowed for a guy like me to come into this trading business, learn my skill set, develop it over time, list the rules, go through the experiences, and now become what I am today, which is a successful trader. Like I said, I've developed this consistent style and track record, and I developed it all on my own. When I got thrown into this trading world, I didn't get much, introduction or information from anybody, and it was up to me to really learn my lessons and learn my rules on my own, which I did. Then I produced something called the Shine iBible, which was my list of rules that I followed. I followed them to a T. I wrote them down. I went through the experience of them. I went through the analytics of them, and I realized which ones work for me, which ones don't, got rid of the ones that don't, put them down on a list, and now I still, to this day, many years later, I still follow the same list of rules. So we're going to get into those. I've trained thousands of people over the past decade plus, and literally thousands, and a lot of them have been able to come out and to be not only successful traders but millionaires, and to just be huge and successful at what they do. I'm proud of it. People are proud of it, and that's why I continue to push out information to the street. We're going to get into a little bit of like Shine's Trading Room was created because I feel strongly that people need to have a community and to have an environment in their trading world, because sitting there at home in your underwear by yourself is just not giving you the edge that you need. I know that at times people feel like alone out there, and you shouldn't feel alone. You really need to have a team and support and infrastructure and all the tools at your disposal these days to make you get that advantage that you need in the trading environment. So we created Shine's Trading Room because we used to have literally fist fights for people to sit with myself and my team, both sides, and people wanted to pay and so on, and now we try to include everybody to be part of that environment. One of my mottos, one of my thoughts, we're going to get right into it, one of my mottos and thoughts is, where will you be the next time we have an exceptional trading market, right? We talk about that all the time. People are preparing. You're on this broadcast right now because you want to hear what I have to say. You want to hear how you can improve your skill set going forward, and how are you going to handle yourself and learn and grow and prepare yourself for the next time you hit that trading market. Now we're in a interesting trading market, to say the least, since, I don't know, the summer until now. 200 to 500 point swings, another 200 point day today, rally back 200 points just to close down 200 points. Guys, the market's there. Who's taking advantage of it? Who's out there making it happen? As you guys know, I'm a people person. I'm right down there with you. I'm here to motivate and to instruct and to guide, to be able to get people the skill set in order to handle these type of markets. And I just want you to be prepared for, if the Super Bowl comes or the World Series comes, you guys are prepared for it. So let's move on. A little bit more, a little Shine's Room, I guess both a plug and also just some insightful information. Between equities and options and news trading and swing trading, a conducive environment is vital for a trader. So you need to be prepared, fully skilled, ready to go. You're not going to go into a bicycle race and have one wheel on your bicycle. Why would you go into a trading day and have not as many support crutches as you could have out there? So it's very important also. We always look for people to emulate the trading styles of successful traders is a very important item, and it's vital. So remember, emulate. Don't copy. We're not copying. People aren't copying. You don't go out there and copy. You have to learn how to fish for yourself instead of somebody handing you a fish. Okay, we're going to start off right away. We're going to get into the meat of the action right away, and how to improve your skills in momentum trading. I have multiple styles of trading. My momentum trading is my alpha creation. Okay, that means that I'm looking to create money on a daily basis, and I may have long-term positions. I may have swing trades. I may have options trades, and so on. Today we want to try to focus on really the backbone and the basis of momentum trading, and some of the things that go on in my psyche, in my life, and what I have to think about it. And every case that you may be in a certain time period, I want you to be able to be more prepared to handle yourself at that time. So we're going to try to improve people's skills. Close your eyes for a second. Everybody out there, we have a large audience on today, and I want you guys to close your eyes for a second. Okay? Everybody close your eyes. I know it sounds weird. I want you to picture you are Neo from the Matrix. You are out there feeling the market. You are looking at the level 2 box, which is the inside market and the depth of book. So you're looking at the different price quotes, both on the inside market and outside of it, and you're feeling the colors and the lights and the numbers and the movement and the charts and everything else that comes with it, and you start deciphering what those numbers and those things mean. Everybody remember your first day you got in front of a trading screen? Remember what it felt like? It felt like you were reading a foreign language. You had no idea what you were looking at. Then the second day, third day, fifth day, and 2 months later, you're feeling so much better. At this point, I feel like I am, and where I want everybody else to get to is you are Neo. I am Neo. A recent, one of my websites recently, one of the designs, literally the developer sent me a picture of Neo's body with my head on it with glasses, because I consider myself like Neo. Why? All I'm doing is what I ask for everybody else to. Take that information that's pouring out at you and be able to decipher it in a quick, concise, easy method to be able to feel those flow of the market. And that's what we're going to get into right now. There's the flow of the market. So you end up in a place where the market's moving up and the market's moving down. Then the market may break out higher. Then there's a pull-in at the next step. Then there's another move higher. Then there's another pull-in. What are you doing? You're looking for these waves, guys. These are all waves. You're trying to ride that wave. You're trying to figure out Neo, the Matrix, the colors, and you're trying to ride that wave. What does that mean? Let's get right into it. You have bids and offers. You're anticipating some of the move. You're trying to catch or capture those outer bands of that movement. What does that mean? Bottom part of the chart, top part of the move, both entering the position and exiting the position at the right time. What are we doing, guys? We're trading momentum. Why is that momentum? There's something called buying and selling momentum. There's a push and a pull. When you have a push and a pull, you feel the push coming. Then you feel the pull taking over. Same thing in trading. You have a downward move. Stock's going down. What is that called? Selling momentum. Right? We're talking about momentum trading. Selling momentum. You got a rally. The next thing is called buying momentum. What is that? That's where the buyers outweigh the sellers for the stock to move higher and continue to have that battle. Okay, I look at the market like a flea market or eBay. Okay, you're looking for buying momentum and selling momentum the same way. So if you're in this marketplace and you have 100 pairs of sneakers to sell, but you only have 3 buyers, what's going to happen? The price is going to go down, right? Same thing like a share of stock. You have a ton of sellers. What's going to happen to the marketplace? Ton of sellers, not enough buyers, price goes down. Now you reverse that. All the buyers step in. You now have 200 people looking for those same pairs of shoes. Now there are only 20 pairs of shoes left. What ends up happening? Price of stock goes up. What have you done? You're trying to capitalize on that momentum. Okay, it's very important. If you guys' eyes are still closed, that's fine. Don't fall asleep. But definitely understand what I'm trying to say. Try to paint this picture of this ebb and flow, this flow up and this flow down. you know what, I've taken advantage of that flow for so many years already. I look for people to join with me and to be able to take advantage of the same style. Okay, we get into a couple other phrases throughout the presentation. One of my popular phrases is sell when you can, not when you have to. That also works with buy back or cover when you can, not when you have to. If I'm going too fast for anybody, feel free to type in, slow it down. You want me to repeat something, I'll do so. For me, it's very important to hit on these points for people to understand what that flow looks like and make it first language for you. Okay, so the last phrase on this slide is just sizing and building your positions is critical. That is a whole seminar on its own. It's about during that ebb and flow, during those waves, sizing in, sizing out properly, how to build that position properly, how to maximize your profits, how to maximize your winners, and at the same time minimize your losers and make sure that you are keeping your position tight. I mean, even in this marketplace, it feels like this marketplace is just like that, right? Look at our flows, and I'm going to go on to the next slide, but look at our flows, right? Look at our markets. We go down 200 points to rally 300 points. What if you were building a nice, healthy position down there towards the bottom part of the range? You know what, guys? I'm going to give you this inside peek. You know what? They're going to make it look ugliest down at the bottom. They're going to make it look prettiest up at the top. What are you doing? You're identifying the bottom. You're identifying the top. You're building a position in that strong strength point of yours. People used to say that Shine had this power alley. And a power alley were certain positions, certain times of day, certain names, certain stocks, morning, afternoon. And we'll get into certain timings like later on. But for me, when you see that developing, you need to be ahead of the curve. Okay, especially when it comes to momentum. You don't want to be late to the party. You have to get out while you can, not when you have to. I put up a quick chart, and you know, as you guys know, I do this every day. I do trade. I am the both the presenter, both the instructor, both the professor, and also the trader at the same time. And for me, that's an important item for a person to be in the trenches, not only practicing what they preach, but also have the ability to pass it on to people also to be able to accept. Hey, let's take a look at this chart. This is ATPG. This is just from yesterday. So I clipped this out, threw it in the presentation for you guys. Down here, you see at the beginning of the day, 931, 932. That price is $5.70. We do give a live trading broadcast every day. We talk about what we see out there in the marketplace. Gets down to $5.70. What I saw 5,000 shares on the offer of this stock, 571. What we just talked about? We talked about them making it look its ugliest down at the bottom, right? Ugliest, I mean like, wow, this thing's going to break lower. There's 5,000 shares on the offer. I need to get out of all my stock. Guess what? It didn't even go 1 penny lower. I bought 5,000 shares down there. I took the offer. Look what the next 2 or 3 candles, and I'm not going to get into technical analysis today. Look what the next 2 or 3 candles were. Okay, I get into the momentum of it. I felt the momentum switch from selling to buying in a hurry. Lightspeed allows for us, technology allows for us these days, this modern age, to be able to capitalize in that quick execution. I have to call up that broker that I talked to you about earlier and repeat my account number, repeat my order 3 times, not be able to get that. I was able to put the execution in right on the spot, grab 5,000 shares. Look at the next 2 or 3 bands, 2 or 3 candles that are out there. Literally a 50-cent move on a $5.70 stock is about, I don't know, 9% in about 12 minutes of time or something like that. Just something out of control, ridiculous. Why? I felt the momentum. I felt the momentum continue throughout those 3 bars. Guess what happens next? Some of the selling momentum comes in, right? If I'm going too fast again for anybody, selling momentum up here. Guess what? Those people, those traders were able to sell out towards the top. Right here, we're able to get best possible price. That's $6, a little bit over $6. How do you get out up there, guys? This is practical, hands-on stuff. How do you get out there? You're anticipating that. You're putting out your offers. You're putting out your offers early. If you're scratching your head and you're waiting till you get up there at $6.20, and now you say, oh, listen, maybe I'm going to think about putting out some offers soon. I'm going to fumble over the keys a little bit. I'm going to press one of the keys with my elbow, and I'm going to get the wrong price, the wrong thing, and so on. That's not going to work. If you're anticipating this thing is going to have a nice little move higher, I'm going to put out some offers, I'm going to piece out of this position that I pieced into, and I'm going to maximize and get taken on an offer. Remember, taken on an offer, a couple benefits to taking on an offer. Taking on an offer, you are supplying liquidity, cheaper commission structure, maximizing the difference between the bid and the offer, which is called the spread. So you're capitalizing on all that plus something that's super key. You're taking advantage of the momentum on it. Last guy who buys it, you're selling it to. How good does that feel? Feels great. How often do I do it? All the time. How often do you do it? Not sure. You should ask yourself about it. How often do you do it? You should make it more often. You should anticipate, be a little bit more flexible, a little bit more anticipatory, and we'll get to that also later on in the seminar. Anticipate what's going to happen. Don't react to it. By the time you react, you're dead.
Hey, Dave, a quick question just came up that I want to ask. Are you also watching the time and sales and the ECN books to help you get this feeling of the momentum?
Yeah, so time and sales is something that I definitely watch. I have it up on every stock that I'm watching. Time and sales, along with all the other elements that we're talking about, is something that gives me an inside look in what the stock's doing. So I see a lot more buys and sells. I see potential bidders that are maybe refreshing on the bid. Everybody familiar with that? Refreshing. Somebody shows 100 shares and they're buying thousands, and I'm saying, wow, there's only one guy with 100 shares at that bid, and I see him taking its stock. I look to take advantage of those plays because I see I'm able to read it. You guys are also able to read it through both the ECN books and also through the time and sales. Will allow for you to see really what's happening. You get a real nice little look, peek into what's really happening out there, and I love to anticipate that and take advantage of it. At the same time, if you're waiting for time and sales to tell you to start putting out your offers, you might be late to the party. That's where maybe your anticipation comes from. That's maybe where your position management comes from. But most important for me, it's really anticipating that move to happen, maximize my winning position by being able to do that, because now I'm capitalizing on, like I said, the execution, the spot where I put out the offer to supply liquidity, and also capitalize on that spread between the bid and the offer and the momentum. So the momentum pushes into you. You want somebody else out there scratching their head saying, wow, did I just buy 4,000 shares of this stock at 22 cents? Guess who's selling it? I am. Join me, guys. Join me. Don't be late to the party. These things have millions of shares being traded. This is the proper fundamental trading, at least for me, over my 15 years. If somebody else wants to argue with it, I'm ready to debate all the time. That is a anticipation. Put out your stock, stick it to somebody else. Why is that? What am I doing after I sell that, guys? I sell 21. I should say, ladies and gentlemen. After I sell 21, what's my next move? Somebody answer. Somebody type it in. What's my next move? I'm not sure if they're typing, but guys, we have a large audience. This seminar must be interactive. I am the interactive guy. You grab me in a hallway, you grab me anywhere to talk to me about, what's on my mind. What do I do to make me have a leg up? This is interactive. So what am I doing after I sell that 21? I'm not sure, Mike, if anybody did type it in.
Yeah, we got a few answers. We got to buy at 21.05, or buy at 18, wait for a pullback, or
awesome.
Look for a dip to re-enter.
Awesome. Excellent, guys. This is reinforcement time after time. The proper answer is D, and it was look for a dip to re-enter. Why? I want to get the best price again. I did not make this chart, Mike. You could confirm that. I did not make this chart. I just took a clip of what it looked like. And here, there is a pull-in. Are you kidding? Did it pull straight in from 21 down to $6 even, 6.01? You couldn't give yourself a better position. New traders, old traders, veteran traders. I don't necessarily mean old by age, but just veteran, experienced traders. Stock pulls in 21 cents. What is that, 3.5% pull-in? Are you anticipating, guys, again? Are you putting down your bids and your offers down here? And this is going to lead us into a continued lesson of risk-reward. Are you having your risk-reward down there intact by pulling it in, not holding this whole pain, 6.21, you hold your position all the way back to $6 even? You better be. You better be anticipating. You better not be holding your stock down for that whole pull-in. Why? Once again, because I am. I'm anticipating this. I got my bids down there. I'm looking for a chart like this to develop. Guess what? No risk. Very little risk. 2, 3, 4 cents. What's the next move? 34 cents. Once again, I did not make this chart. If you cover your finger on the top left-hand corner on that ATPG, I don't care what chart this is. I see it every day. Every day it's out there. I didn't save this chart from 6 months ago. I grabbed it from yesterday. The rest of the charts I might even have from today. And I like to be able to get to them. So I'm going to zip through what I'm looking at here, what I do practically speaking, literally practically. You know, we talk about it, and Mike's always like, let's get to the meat and potatoes of it. I want to give people the actual skill set to have Lightspeed traders be the best traders on the planet. This is how I do it. Get up to that 635 range. Once again, you are only getting out of this thing up here if you're anticipating. If you have your offers out there in the high 20s, low 30s, you're getting out, you're liquidating, you're putting out some good offers, you're clearing out, I don't know, half, two-thirds, 75, 90% of your position up there. Money management and position management is for a different lesson. Once again, I don't want to get that into it. And guess what you're doing? Everybody type it in again. Blow up the chat side of it. What are you doing again? Same answers. D. I look for D. I look for it to pull back. I look to get a great price off. Are you kidding? Look at what this thing looks like. It's back to that 605 level. Okay? Are you anticipating? You have your bids out early. You hear me, guys? Bids out early. The same thing. Buy when you can, not when you have to. Or cover when you can, not when you have to. Same thing as sell when you can, not when you have to. Same type of thing. You anticipate. You put out your bids and offers early. In this case, you'll be putting out your bids under 610. Getting filled, getting filled, getting filled. Next stop back to 620. Okay, this in here is called a chop. Okay, this, you guys can see my little cursor in the middle over there. This is the chop at 620. Holds here for a while. How much risk is here? Not sure. Depends what your stop is like. Does it go below 615? Maybe. You know, there's something called a blip trade, which we feel in momentum trading a lot. This is the blip trade. The blip trade is you're holding solid at 18, 17, 19. All of a sudden they blip you out maybe 15 or 14 for a split second. That's no fun. Anticipate it. Means that you may be the person then having bids down there. Just to buy that little blip, take advantage of it back at 20. Look at the next leg again. How much risk is really there between 15 and 20 versus the potential upside of this next 40-cent move? Very little risk.
Hey, Dave, where are you setting your stops? You know, like if you get a double top and the price ends up crashing, how are you stopping yourself out?
I mean, stops is a, once again, like, you know, Mike, I'm doing this a long time, so all these are like serious lessons, and I keep the questions coming, and I love to get around to them. For me, stops, I'm going to give you the sort of blanket answer, the generic answer on stops for me is, one, it depends on volatility and price. So volatility on the name and price is going to make a difference. At times, I'll set a natural parameter of a 0.5% to 1% stop of where the stock is trading at that time. So, for example, a $6 stock, I know this sounds crazy, a 0.5% to 1%, which would be 3 to 6 cents. I know it sounds crazy, but it almost works. And if you look at what this stuff looks like, if you're able to get in at that right price, and that will travel with you. Now, there is room for expansion and adjustments on a you know, 0.5% to 1% rule. Depends on the vol on the name, the volatility. But really, it's you know, key to be able to put that, get your positions on at the right price, have those parameters, have those stops in there. I'm a huge fan of stops. I'm actually I'm the enemy of the non-stop person, the person with no stops. And yeah, no, I'm going to adjust here. And once again, for a different lesson. But you know, especially for people starting, I look at trading like mathematics. So it has to be a risk reward. The way you really define your risk is with stops. So I hope that wasn't too concise of an answer. I'd love to be able to get on to the next. I don't know.
No, that's perfect. Let's go on.
Okay. Yeah, 50 or 100 slides during the presentation. So for me, you know, great risk reward throughout this whole move. Once again, it's just, you know, I didn't and I couldn't make these charts, and this is the real deal from yesterday. So, you know, I'm proud to take this. I did take that trade at ATPG yesterday, $5.71, and I did capitalize on it. I didn't revisit it enough as this trend does develop. We'll get into a little bit of the trend is your friend phrase. Okay, here's another chart. This was took from this morning. That's as real as you get. Guys, what's this called? It's called a downtrending stock. Downtrending chart, downtrending everything. Stock shows weakness, continues to show weakness. I mean, here you just listen to the rules, listen to the philosophy, you feel the momentum, you become Neo, and you say this stock will continue the pattern that it gives you, that it shows you. Okay, I'm a patterns guy. Okay, I'm the guy in Vegas or Atlantic City. I'm the guy who, if I see 3 reds come up in a row on roulette, I don't want to buck the trend. A person may say, yeah, it's 50-50 that it happens. I just want to hop on that wave, and I want to take that wave as many times as it goes. So if this is a trend, that means I'm looking for repetition, guys. I'm looking for trade repetition. What is repetition? If I consider this name, which was one of the weaker names this morning, obviously identifying itself, breaking below some of this support at $52.20, we do look at these type of areas as potential support. When it does, I feel like stuff like this is definitely downward momentum at this time, with the ability to have a stop. Once again, this is almost like, it looks like the reverse of the stock that we just looked at ATPG, but I didn't make this chart up today. Traded this stock, waited for a rally, I believe somewhere in here, shorted small position in it, but look at that. I mean, first of all, it never gets up to that 52.20 resistance point. Then these tops of these little candles, these wicks right here, if you're anticipating, you're feeling that momentum, weak stock, weak market, where are you putting your money? You're putting the money in where the smart money goes, that's in the flow of the trend. Okay, again, flow, momentum, trend. The trend is your friend. This is what I look at. Put out some offers over here. Look at what it did the rest of the morning. Continued downward moves. Couple little blips over here. I mean, that doesn't feel too fun, but look, hopefully you're piecing out the whole way down, gets down to this support, gives you that support, right? A little bit of reversal, rallies up, another downward momentum for another 70 or 80 cents on the stock. Once again, literal name, continue the trend, continue the flow. This is what we look at. This is what I do on a daily basis. I mean, it's only worked for 15 years, so I'm not ready to change it. And this is what allows for me to be as consistent, be as flexible as I can be. I'm going to move a little bit quicker now if possible. Another name. Okay, this is today also. This was just in the morning. Look until 10:48. I believe the stock did continue out later on throughout the day. Once again, what do we see here? Momentum. Upward momentum, break out a little bit over here. Upward momentum, anticipation. Sell when you can, not when you have to. Stock pulls in. What are you doing? You're anticipating again. Where's it going to get down to? Probably some of this area where it broke up from. Hey, I'm going to give it a shot. Shine gives it a shot somewhere down here. Guess what? Continued upward. How far? Never pulls in again for the next, I don't know, $1.40 or so. I mean, this is crazy. Once again, I didn't put these together. I didn't draw this. This is what the market did today. Look at this. Support, 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 continued support right here. Looks like it holds pretty close. This is a 1 minute, guys. This is a 1 minute. Pretty close. Another breakout to the upside. That is momentum. Are you guys, if your eyes are still closed and you're eating your popcorn with your eyes still closed, this is it. This is momentum. This is trading momentum. You must feel that. You must feel the buyers and sellers pile up. You must be selling into the buying in order to get your best possible price, and you must be buying into the selling to get the best possible price, right? So up here, this is where you have to be looking to sell or lighten up or liquidate some of your position. Down here towards the bottom, again, you're looking to build that position again. You know what? Traders may have a core position that you're keeping to produce real position power, which sometimes is where your biggest profits are made, but still flowing in and out on those waves as we're talking about today to capitalize and create alpha. Another stock. Guys, don't look up in the left-hand corner. Don't. Whatever you do, don't look up in the left-hand corner. I know everybody looked up in the left-hand corner. Yes, this is a 90-day chart. I know we're talking about momentum trading today. Once again, I did not produce this chart. What does it look like? It looks like downward momentum selling over the past 90 days. Can swing traders handle this also? Sure. What are you waiting for? You're waiting for a weak stock, rallied up, get your price off, have your tight stops in there. Continue to take advantage of this downward momentum every time this thing pops its head up. Once again, rally back to this area where it broke down from. Gets down here at $10 level, rallies back up again, never breaks through this. Continues. What happens when it breaks 10? Bam, $8. what is that called? Momentum. Short-term momentum? No, I'd say medium-term to swing trade to even long-term momentum. Right back up to $10. How many people were anticipating this? You should have been. Okay, you look for this. This is a chart that appears over and over in my world. Guys, how are we doing so far? I know we're not making progress enough, but it's so important to me. It's so vital, and I want to get through this stuff. How are we doing so far? Throwing your questions now. I'm going to move on.
Yeah, we're good with the questions, Dave. If we have to,
cool.
we'll make this a 10-part series.
It's probably about a 40-part series. But okay, guys, this is vital, right? Where's your brain when trading? Where is your brain? Okay, we're going to go into the psyche of successful and consistent trader, right? Isn't that everybody's goal out there? Isn't that what everybody wants to achieve? A successful and consistent trader. I personally feel, for me, I'm looking at my consistency. My foundation is the key to my existence. It's the key to my ability to know that if I have a bad day, how many days will it take for me to make that back? Let's go over that math with everybody for 1 second. And I've been getting this a lot recently. Hey, I made $1,000 yesterday. I lost $2,000 the next day. How many days will it take for you to get back to positive? Okay, you have to be able to have the ability to make $300 to $1,000 a day. First of all, you never should be losing $2,000 in that day no matter what. Okay, but if for some reason you do, you have to have the ability to understand that $500 to $1,000 a day will get you back to positive within the next 2 or 3 days. Do you have that foundation? How are you going to build that foundation? You're going to build that foundation one step at a time. You're going to learn how to grow from 100 shares to 200 shares to 500 shares to 1,000 share lots and so on. Okay, and you're not going to do that day one as a trader. Okay, you're going to learn how to build that over a long-term mentorship and education and guidance type of environment. Okay, you got vital money management also. Let's talk about the money management skills. Okay, let's zoom in a little bit. Money management skills, right? And this is, once again, literal black and white. Shine has a 25 plus 8 give back formula, okay? I don't care how you translate that. That could be for the morning, that could be the afternoon, that could be on the day, it could be on the week, the month, the year, or your career. It just needs to be followed. Mathematical equation, momentum trading, capitalizing on that. This is your guideline. This is what I use for my own trading. What does that mean? That means I'm up $1,000 for the day. That means you're up for $1,000 for the $1,000. How much are you willing to give back to reward yourself with how much more? Once again, you're in for $1,000 that day. You're giving back how much out of that? I give back $250. That's my 25% give back rule. What do I do after that? I go for a walk. I go have a nice lunch. I chill out. I get my timing back on. I understand what my risk reward is. Why do I say that $250, 25% give back should be the rule, or at least for me? Why is that? Because my question is, how much more during that time period was I going to make if I was right? Let's take a trader like me. I'm trading momentum that day, and this, this works on a philosophy of momentum, short-term, or medium-term, long-term. For me, myself, is I'm looking to risk $250 to make another $1,000. That's why I have that philosophy in there. Do I think that, I don't know, during lunchtime, 11:30, maybe not my strongest time of day, that I will come on and I'll make $5,000? Listen, it's happened, but most of the time I'm looking to only risk X to make 4 or 5 or 10 times X. Once again, this goes back to everybody's philosophy. You know, Mike, I've seen so many people recently, and you know, you can raise your hand silently in your own living room right now or your office where you're trading, and you can raise your hand and say, you know what, I've given back too much money recently. I've had a, I was up $1,000 and I gave back that 900 of it the next day. Why? You know, I've seen traders be up $900. They want to make one more 100 in order to do a dance, do the $1,000 dance. And guess what they do? They lose $400. They give back $400 in order to make another 100. Is that a good risk reward? Are you one of those people? If you are, come on, guys, fix it now. Fix your skill set. Fix your money management set of skills. Fix your idea, your philosophy, your brain. That's why I had, the concept of money management skills out here. It's so important, especially with momentum trading. Why? How much you're going to get back on the next move on the next hour, on the next 2 hours, 5 hours. We're going to move on a little bit because we're not making enough progress. There's so much to talk about. Sorry. Beginner traders versus experienced traders, guys. Please identify who you are. It will help you. Okay, identify if you're a novice, if you're an intermediate, if you're a advanced, experienced trader, if you're an expert, if you're a master. It doesn't matter who you are. I'm not telling you something that's not for one of those classes of traders. This is for everybody. I follow myself. This is what I listen to. This is why I give a lot of my classes. I get to repeat these over and over, so they're pounded in my head, pounded in your head. Identify what type of trader you are. Make sure you're doing those type of trades, all right? Whether it be smaller names, more volatile names, more liquid names, bigger names, longer term time frames, and so on. Okay, time frame, once again, identifying time frames is a whole lesson on its own. By identify which time frames you're looking at, okay? If you're a swing trader, don't get stopped out by a momentum trade. If you're a momentum trader, don't become a swing trader just because the stock's going against you. Okay, understand what your time frame is. Work in that time frame. It will help you build positions in that time frame. It will help you with the momentum, and momentum translates once again to any style, because your momentum is. I showed you that Amrin, AMRN. That was not a momentum trade. That was a 90-day trend. So you can take advantage of that, but you have to be doing it the right way, piecing in, piecing out, and identify what type of trader you are, and stick to it, and stick to it correctly. Okay. Once again, part of the momentum, part of the money management skills. Know when to step away from the keys or sit an entire day. Okay. When you are not trading right, when it's not your type of day. Hey, you know what? I'll be the first one to admit Fridays are not my best days. How do I know? I go through my analytics. I go through my stats. I go through my diary. Fridays not my best days. What do? I chill out on Fridays. I play a little bit more defensive. What has that done for me? It's allowed for me to take advantage on Fridays. Okay? I need to know when my best times are, when my worst times are. I try to sit there and make it happen in a real way, like a Super Bowl, like that prime time, when it's time for me to sit there by the keys and to make that happen. When I see that trade develop, I don't know, ATPG even yesterday, I need to sit there. I need to be aggressive. I need to size it up. I need to identify and rate those trades properly in order to make sure that I'm capitalizing in a big way. Money management, risk reward, these are all parts of momentum trading. Is something that must be pounded in. Okay. I also say don't be a stubborn trader. Don't only be bull bear, be flexible, especially momentum style of trading. Be flexible. If you go back to that Amrin chart, and I'm not going to go back to it, or you go back to that ATPG chart, believe it or not, those pull-ins, there are opportunities to the short side or to the rally side. Personally, as a sort of an instructor, I look for one side of those myself. So I'll have strong names, and I'll go long on those. I'll have weak names, I'll go short on those, and I try not to stray when you are, and this goes to the experienced traders out there, when you are doing those trades, you can be on the other side, but make sure your stops are really tight. Make sure your risk reward is always intact. How'd you do in the summer versus October? The summer was a total meltdown. October, we had a big rally back. How'd you do during those time periods? Identify yourself. Identify if you're flexible. Remember, this is all self-help stuff. Yes, I will continue to pound it in. We pound it in on my live trading broadcast every single day. It's important for people to understand and know and keep those list of rules on their hands, or I will continue to pound it into them. It must be done, must be heard. Okay, just showing sort of like what, down here you got beginner traders. I look at this like how sort of money management. Once again, you start off, you're a beginner. Guys, don't let yourself be the chart that continues a downtrend throughout. Keep your positions, keep your ideas really tight at the beginning until you get more advanced, and you become more of that proper beginning trading chart. This is a chart. It's a P&L chart, really. But once you get through that flat line, this is what I looked like when I started. Literally, I think I went down maybe $5,000, maybe $4,500, $5,500 my first month and a half. I made $28,000 my second month trading. This is exactly what I did. Everybody else who I was in class with, they decided not to listen to the rules. This is what they became. That chart on the left, that arrow going down. This is the proper way to start off. If you're a more novice trader, don't let yourself go down too much. Small positions until you get bigger and better, and there will always be times to battle in full speed mode. Mike, how we doing?
We're doing good. And Dave, before you go on, can you just, because I think a couple people missed it, can you just recap what the 25 plus 8 formula is, what those numbers stand for?
Sure. So 25% give back in the morning. The 8 plus 8 at the end is when you come back from that long lunch or that game of bowling that you played in the middle of the day. You get 8 more percent. I give you 8 more percent give back for the day. You're up $1,000, you lost $250. I know it sounds, and it could sound piker, and it doesn't matter if maybe you're up $10,000 for the day. You get back $2,500 at lunchtime trading, which is improper to do, and you get back $2,500, and now you get $800 or $80 or $8,000 more, depending on your size, to trade in the afternoon. Why do I say that? And we'll talk about the novice trader at 8% more, $80 more, because in the afternoon, if you have $80 risk, but you're looking to make, or you have the ability, the skill set at that time to make $300, $350, $400, maybe $600, what are you doing? You're at 5 to 1, reward versus risk, someplace where I always want you to be. What happens if you give back your 8%? You're done. Cut off. No more drinks for you at the bar. You're finished at that point. You just, the risk reward needs to always be there, and that's the formula that I live by and I try to instruct. Is it always perfect? No, but the more you pound that in, just the extra little edge that you get. Guys, one more thing also that's important, which we're going to go on. Successful advanced trader, just to try to keep piling up your P&L like I do. So one thing that I wanted to, I'm just going to zip through this. Okay, evaluating some risk reward. There's something that's very important that I want to talk about, and it covers in all these areas. It's handling yourself when you hit your max loss for the day. We're just talking about vital money management skills, and mastering a lot of these skills will give you a little bit more of an advantage, and that's what you need in this business. Okay, I ask one thing because I've seen it a lot recently. I set myself, Dave Shine, Shine's Room, set myself a max loss for the day. Why? Because I want to get to a point where I lose money for the day. I know it's not my type of momentum, potentially, day. It's not my type of trade. I didn't trade right. I had my mind out to lunch. I lost my max loss. What do I have to do? I got to shut it down. So I've set myself a max loss. Doing this a long time, and I still set myself a max loss. Set myself a max loss, push my upside, make sure I handle my max loss properly, and don't go over that max loss. And I look back, I ask people to look back and see where you were on your max loss days, and if you went over your max loss days, if you could have that money back, how would you feel? Raise your hand out there, everybody, interactive. Raise your hand. How many days have you gone over your max loss that you shouldn't have? How much would you have back in your bank account, in your trading account and everything if you did not go over your max loss that day? My answer would be a lot. I've seen probably, I don't know, I'm not going to say more traders than anyone because I know, Mike, you're up there, but thousands of traders I've seen. And if people could have back what their max loss, that killer position that takes you out, that hurts you, that damages your P&L, that hurts that risk reward money management situation we just focused on for the last 15 minutes. If you could have that back, you'd feel much better, your stats would look much better, and it's something that's mandatory. That's why I said it for myself. Please think about it.
So, Dave, are you ever setting a max profit target for yourself? Is there a point where you're getting out just based on the amount, or is it just on the downside?
It depends. Is that coming from you or the community?
This is from the community.
Okay. You know what? I don't need a max gain. Right? I don't need a max stop. Why? Because if I'm up 2,000, didn't I just give you the I just gave you the golden rule, right? I gave you the golden ticket just now. If I'm up 2,000 now, what do? I got $500 to give back. 500 to make how much? Another 2,000. If I'm up 5,000, and I'll do this, all the time. If I'm up 5,000, I get back $1,250 in order to make another 4,000 or 5,000. My risk reward stays with me. If I do that throughout the whole day, and you've been there, I've made $150,000 $10,000 plus a day. So if I would have stopped that day at 10,000 or 20,000 or 30,000 or 50,000, I wouldn't have achieved $150,000 that day. I paid for my house in 1 month of trading. And, you know, people may say that I'm small, but you know what? I enjoy my model, okay? My consistent returns in all these years really, you know, speaks for itself, and that's why I go through these philosophies, and that's why I have no upside. My downside's always limited. Mike and whoever asked that question, on every trade I have that philosophy, okay? Momentum trading, I'm up 50 cents on a trade. How much of that trade am I willing to give back? 25%. So I'm willing to give back 12%. Why? I mean 12 cents. Why? Because I think I can make another 50 cents. So my risk reward at that point looks like, and it's, you know, a cool question because we're right here at Introduction to Risk Reward. So I'm up 50 cents, give back 12 cents in order to make another 50. A reward of 4 times or 5 times what my risk is. So I have no max upside both on the trade. I have no max upside on my profit and loss or my profit for the day, but I make sure to keep my downsides really tight. Okay, let's go on to this Introduction to Risk Reward. Hey, anybody out there ever wrong? Raise your hand once again.
Not me, Dave, not me.
Mike, I know you're not. Anybody else? Anybody wrong? Anybody really wrong? Okay, how do you feel when you're really wrong? What's making you really wrong? How do you level the playing field? You know what? I'm the first one to admit it. You guys see it every day on the broadcast. What works for me? Here's what I do. Okay, I am wrong all the time. It's so unbelievable. But let me tell you, those couple times when I'm right and I grab that ATPG, and yesterday was a perfect example. You know what? I don't know if I even had any other winning trades for the day. Chances are I did. But if I didn't have any other trading, profitable trades for the day, and for argument's sake, I made $1,000 on that ATPG trade, I was only right once. But since I was really right, and I saw my spot, my entry, and I took that football, and I ran through that hole, and I seized the opportunity, I made 4, 5, 6, 8 times what I lost on the other trades when I was wrong. I've done this my whole entire career. The first thing that needs to happen is you guys need to say for yourself is that I am wrong at times. I am really wrong at times. Hey, I'm only batting 50%. I'm only batting 30% or 300 or 500. You know what? If you are, how are you handling yourself the times where you're wrong 70% of the time? And how are you handling yourself the times when you're right for that 30% of the time? That's the key to risk reward, and that's what keeps me in line all the time. Once again, it translates from a micro scale to a macro scale, okay? If I'm wrong in the morning, how much will I'm willing to lose? If I'm right in the afternoon, how much am I going to push the envelope? If I'm wrong or right, Monday, Tuesday, Wednesday, what am I looking to both avoid and capitalize on Thursday or Friday? It happens all the time. I happen to pride myself on trying to be as consistent as possible. There are times where I've batted, I don't know, 90% or you know, greater over 60 or 30 or 100-day time periods, and that's something I look to pride myself on. But it only goes back to this exact reflection of what do I do when I'm wrong? How do I handle myself when I'm right? I flourish because I am able to, on those times when I'm right 30% of the time or even 20% of the time, and I find one ATPG, I am pushing the envelope. I'm using all the skills at my disposal to push the envelope, maximize those trades, keep the other trades really tight, back to the momentum again. I see the momentum in my favor, capitalize on it, kill it, knock the cover off the ball, and make 5 times what I lost on those other trades. Everybody understand that part? Everybody listening, everybody ready, implement that tomorrow. Okay, if you're not doing it already, implement. So that's how I level the playing field. I know that you know the next little post right there is advantage. What advantage does Las Vegas have in blackjack, for example? Once again, I know the disclaimer is trading is not gambling. We don't relate them that way. I'm a math guy. I'm a numbers guy. For me, it's all about numbers. What edge? Everybody out there, type it into the broadcast. What advantage does the house have in blackjack? How many of you guys are familiar with that? What does the house have in blackjack? Type it in. If I had to guess, I'd say it's something like 2 to 4% advantage. 2 to 4% advantage. Have you guys been to Vegas recently? These hotels, literally, I read something. I think the Wynn is a $3 billion hotel. These guys aren't building the $3 billion hotel with that, not having an advantage, but they are building on having a 2 or 4% advantage over the player. Okay, so understand what you're trying to do. You're trying to get this little edge, the little things that I'm piling up on you, the skill set I'm adding to you. And we're going to do this every month. And we're going to add tools and tools and tools ongoing. We're going to continue to add these little percentage points in order to get you to the promised land. These are the things that I follow on a daily basis, and it's taken me to where I am today. And, this is why I do what I do. So we're going to move on.
Hey, Dave, we're running up against our time spot here, so we got to tie it up here, and then we can always pick up on the next one.
Okay, I'd prefer to do that because I'd like to also take questions and answers. And like I said, there's a huge audience, guys. It's vital right now for you to ask your questions while I'm here, while I'm at your disposal while we have it. Your question is everybody else's question. Let me answer it for you, and it will really help other people out there. I know you're shy. Sometimes what I do, when I'm doing a web broadcast is I'll call people out. I want everybody to ask a question, interact while you can. This is an interactive broadcast and seminar and webinar, and I want you guys to please ask your questions, get them out now, and it could be anything. Try to keep it market related, but I'll talk about anything.
So listen, I actually did. I answered a ton of the questions as you were going through the presentation, but there are a couple kind of overwhelming themes and recurring questions that keep popping up. So I'll ask those on everyone's behalf. And the most common one is, look, how are you actually finding the stocks that you're trading on a daily basis? What are you using? Are you using filters? What do you have? A magic crystal ball?
Yeah, actually it's crystal ball, called the Shine's crystal ball. We have, once again, in the community, and like I said, not to give too many plugs, but in the community, I think that it takes that trading environment that I always had with hundreds of people giving ideas of what they see out there, what they look for out there, even if it puts a name on the radar. I love getting names on the radar. So I'll look for names, and once again, these are the qualifications that they need to have. They need to be volatile enough. They need to have enough liquidity, which is volume. That means that there's enough enough bids and enough offers. Why? Because I need to have my mathematical risk reward that we focused on so clearly. I need to have that intact. What do I need to have intact? I need to have the ability to get into the stock, which means I need to have liquidity. Let's say, for argument's sake, purchase the stock. Then I need to have the ability for my trade to work out. So I need to have enough reward on the upside to make the trade worthwhile for me. For me, from my momentum style, that comes from what we spoke about as far as having enough volatility in the name. So stock's going to move $1. I want to capture as much of that dollar as possible and still only limit my downside to X. So X may be 20 cents for me to capture $1. I'm looking for any of those names. That's the prerequisite fundamentals.
All right. So okay, great.
Hold on. Then I'm going to get to a point where I do use filters, scanners. That's actually part of the presentation we'll get to, I guess, in about 3 weeks, Mike, if I'm counting correctly. So that's when I think the next webinar is going to be. And we have filters, charts, scanners, watch lists, adding more watch lists, doing some research, hours of research we compile on a daily basis, and that's what gives me my focus list. But I give you the underlying fundamentals of what I need to have in a stock in order for me to get involved in that stock. Go ahead.
And what about like high price, high volatility stocks like Apple and Google? Are you trading those too, or do you think there's too much competition in those? What's your feeling?
You know what? It really depends on the trader. We talked about people identifying who they are. Are you a beginner? Are Are you been a novice? Are you intermediate? Are you an advanced? Especially when it comes to momentum trading, you have to really perfect your risk reward on it. We talked about also limiting how much your risk would be, where your stops are, and so on. These names, these Apples and Googles, and I've been there and I've traded all of them. And I literally made 100 points in a day on Google. Apple's, you know, huge volatile name. A lot of momentum traders trade Apple. I think that the key to identify on those is that can you control your downside? Can you control the risk element and the risk part of the formula of risk-reward formula? So once you identify that, so maybe you know a person trades Apple, and I'll trade Apple. I just know on Apple I'm willing to risk 75 cents to make $3. And if I'm good enough and I'm anticipating enough, like we showed you on those charts, entries and exits, different levels being exact, and if I'm as much of a sniper as I would love to be, and I flow those waves and those ebb and flow waves up and down, and I'm in and out of those, then sure, I'll trade anything as long as I can control my downside. You know what the problem people have mostly with trading those in the Googles is that if you're a trader who takes 100 shares of Google and you make a quick 75 cents, and then the next trade you get into, you lose $4, is that a good risk reward? Ask yourself that, because I don't think it is. Okay, so that's sort of how I feel. That's my philosophy on it, and you know, I will trade anything as long as I'm able to control my downside and manage my risk reward.
All right, cool. And what about, do you have a favorite time of the day that you trade? Like, you know, are you seeing more of these opportunities at a certain time?
Definitely. I'm a 9, 10, and 9 o'clock till about 11 o'clock religiously sitting by a screen waiting and seeing my opportunity. Why? We talked about the reward side. If a stock will only move $1 on the open during lunchtime, the stock's only going to move 40 or 30 cents. I've also analyzed my stats, and my stats come best from that first 2 hours of trading, even pre-open at times, making sure there's enough liquidity to get in and out, because usually the volatility is there. The question is pre-market, and obviously it's not for everybody. Pre-market, is the liquidity there, because the volatility definitely is. The same thing with earnings season. You guys see some of these stocks today, NTAP after the close, moving $4, $5, $6, 20, 15, 12% at a time. I mean, it's just incredible moves. You just need to have enough liquidity and enough volatility to take advantage of it. My prime time comes from 9 o'clock till 11 o'clock. I do focus on what it looks like during lunchtime. I am always in tune with the market. I am always listening to what's going on around me in my environment. And then also it's the textbook says 9:30 till 11 or 11:15, nice long lunch like we used to have, and then start again at about 2:45 until the close. And you see once again today, if you look at the action even today, you had a huge pull-in in that last hour of trading. That's where the risk-reward goes in your favor, and that's when I take advantage of it. Lunchtime, some of my worst trades, piling into that position, looking for a 20-cent or 40-cent reward, and ending up with a 30 or 40-cent downside. And you can never have the same downside as you do upside. It just doesn't work.
Okay. Thanks, Dave. So, yeah, we actually ran past our time a little bit, so we're going to have to cut it off here, or else no one's going to be able to upload the webinar file if we keep going.
Here's what I'd like to recommend, if possible. I'd like to say, guys, we'll be doing this next month, and Lightspeed and Mike will send out an email to everybody. I recommend this. Pass on the invitation to all your buddies, to all your friends. Get them on to hear this. Make sure that people are there getting this education that is something that's worked for me and vital for me, and what I pass on day after day, year after year to thousands of traders, and make sure that you're identified the one. We'll talk about it next time. Are you the chosen one? So just stay tuned for the next part of the ongoing educational series given by Shine's Trading Room and Lightspeed.
Yep, definitely. And like I said at the beginning of the webinar, we'll have all the information posted for the upcoming webinar sessions on our website. You can find that at lightspeed.com/webinar, as well as all our past recorded webinar archives. So we'll have that scheduled shortly. Dave, thanks again for a great presentation, and we'll pick this up again soon. And thanks everyone for joining us this afternoon. I hope everyone found this informative. Take care.
Thank you so much. Enjoy trading, make money.